Directors and officers liability is about as hot as an insurance issue gets. Given the financial news every day, bankruptcies, and it seems scandals, more and more corporate board members are asking, am I covered? Brokers and underwriters are fielding the questions. We've gone to a man who has some answers. Mike Smith is president of AIG Executive Liability, and he's here with us to help answer some questions about what's going on in the D&O liability market and where it's headed. Mike, given all that's going on in the financial world and the business world and in the insurance world, has D&O ever been in such a spotlight?
I don't think it has, Andy. The last year has been interesting because I think the entire business community and maybe the world in general has recognized how risk is so vital, and understanding risk is vital to our economy. And at the center of that are directors and officers, and now they're looking at their coverage in a way that perhaps they never have before. I think that in the past time they relied on lawyers and brokers and maybe carriers to provide them a product, but today they're asking more questions to ensure that they have the coverage that's going to be there when they need it.
Mike, what kind of market are these directors and officers facing today, both for financial institutions and non-financial institutions?
Well, financial institutions is a very tough market, and we divide it up a little bit into financial institutions and non-financial institutions, commercial D&O. Certainly last year was a year where we saw a number of securities class actions on par with 2004, the volatility in the stock market. So financial institutions are just, you pick up the paper every day and there's another issue with regard to an FI. That's causing an increase in rates, as you would expect. Throw in things like auction rate securities, what's happening with frauds, with Madoffs, perhaps Stanford, something in the paper today about another one here in New York. Those things all lead to increased rates. But that lops over also into the commercial side. You're certainly going to see bankruptcies because there are many troubled industries out there. The forefront would be the automotive industry and the suppliers to it. But you're going to see that there's going to be a trickle-down effect, and while it's not nearly as difficult in those markets as it is in FI, it's certainly difficult.
Some people say the insurance industry is relatively recession-proof. Do you buy that, Mike?
I think it's relatively recession-proof, and I'm not sure how we define that, but certainly there are certain coverages. Some are mandated by statute that you're required to buy as an employer, for example, workers' comp, and there are many coverages, or auto. So those coverages are always going to be there, but you can't deny the fact that some of the factors driving the purchase of insurance are down. Employee count, for example, revenues, construction projects. In our areas of the world, there's no M&A activity, there are no IPOs. The point being, there's not as much revenue out there. And when that happens, certainly insurance companies have to tighten their belt. And I think some insurance companies, if they're not disciplined in their underwriting, these are the times that are very, very tough for them because they won't have the top line revenue coming in to hide any potential problems. Between that and lack of investment income, certainly there is the opportunity for jobs in the insurance industry to be lost.
It's often said that the insurance industry is a business of relationships. Do you think that the younger generation has a different approach to relationships?
Well, I mean, that's a tough question. They probably approach them differently. I certainly have had employees that I see that their main interaction with an underwriter's interaction with a broker is through email, and I always wonder how you can develop a relationship through that. But they do it, and I think that's more reflective of my age than it is their ability to develop relationships. But I absolutely think they develop those. One of the things I've found going through the last 4 or 5 months in our business that we have a lot of strong relationships with both the brokers and our insureds, and they have strong relationships with us. And the relationship is more than just a personal, we've done business together. It's also about what I can deliver to them, what promises I've made and our institution has made, how we followed through on that. And I think the fact that you have that ability to develop a relationship so that when times are tough, you can then call on it, it makes the relationship even more important today.
Is experience more important in D&O underwriting, you think, than other lines?
I don't know whether it's more important, but it's certainly important in D&O to have experience. And by experience, that's not just the experience as an underwriter. It's collective experience, meaning having the ability to look at past data, to understand what's happened previously, how that's impacted a book of business, and where you go from there. It's sort of the roadmap to where you're going in the future. Having said that, it's not absolute, because underwriting D&O is more of an art than a science, and the art part of that is that you take that roadmap, but then you apply to it judgment, and some of judgment certainly comes from experience and having lived through a few cycles in the insurance industry, in the D&O industry.
What do you say to brokers who say there's too much inexperience in underwriting today? I think they use the derogatory term Doogie Howser to refer to underwriters with maybe only 3, 4, 5 years experience. What do you say to these critics?
I think it's completely unfair and inaccurate. I think our industry is filled today with bright young people and talented people that are probably better than we've ever had. I think that they bring a level of competence, a level of financial ability to underwriting that is something we sorely need. I think sometimes it's tough because we write a lot of accounts, and you want to develop relationships and you'd like to do it all at senior levels, but that's not possible at some point. So you have to bring in underwriters, and if you build an organization, in the organization I'm in, we have those underwriters, but they're not making decisions by them in a vacuum. They're reviewing it with their manager and managers beyond that. We look at it and manage it away, not to impede their ability to grow, but rather to train them and make sure that they're making the right decisions. So I really don't think that's fair. I'm very, very proud of the people that are in this industry. Certainly in AIG Executive Liability, we've got a team of people that I think are second to none in the industry.
Mike, as you've said, there seems to be a new financial problem or even scandal every day. The Madoff situation in particular, I'm thinking of. How do you avoid being on an account like something like that? Can those be detected?
I don't think you can absolutely avoid it. Remember, it's like baseball. If you get a hit 3 out of 10 times, that's a pretty good average. I'm not suggesting that's a good average here, but you build your underwriting model, you use your judgment. Part of that judgment is when I've been in underwriting meetings and you come away with a feeling that you're not getting the full story, you have to pay attention to that feeling. So you want to have your process, be comfortable with your process, and also have the ability to say no. One of the things, no, I'm talking about to a broker or to an insured, if you don't think the risk is the right one, or if you think there are issues. You're never going to avoid it. Greed and avarice have been around since biblical times, and they're always going to be around. But you can do everything you can to avoid it, and I think you can avoid some of those.
Let's skip ahead to the claims process, if that's okay. I'm wondering about the broker's role in the claims process. Can the broker play a constructive role in this process?
The broker can play a constructive role, and the broker has to, I think, communicate and manage expectations. If an insured comes into a claim, and first of all, you have to realize the insured has had a claim, so obviously they're concerned. That's not a positive event in their corporate history. And if it's the first one they've had, they need the broker to help guide them through the process. And part of that guiding is that it is a process. You need to communicate with the carrier. You need to provide information to the carrier. Those are fair things to ask, and not only fair, they're required by the contract. That is the policy. And as long as the broker can help to facilitate that process, I think it does make it easier on both sides.
Well, given how busy you and AIG are these days, Mike, I certainly appreciate you taking time here with us at Insurance Journal to discuss today's D&O challenges.
No problem. Thank you very much.